So that gives you some idea of how the payer mix has contributed to the a little bit of stagnation in the revenue growth. But it does not take away the fact that West, we did have underperformance in North, especially, and a little bit in West. And the other aspect is that we did a rationalization during this year with MS Ramaya, which was a key contributor um, uh, in terms of our South Cluster revenue, which also contributed a little bit to the overall impact. Maybe a couple of % impact came from the rationalization. Maybe I mean, I don't have these numbers exactly calculated because we have not analyzed it in that fashion. But you can attribute 2-3% to our maybe poor performance in North sector. Maybe 2-3% you can attribute to the payer mix calls we have taken. So it's some of you can assume that kind of mix in terms of our performance.
Right.
So you see, these changes won't play out as a one-off effort, and then you say it's just a one-off effort and then you are completed with the exercise. It's actually a constant effort to apply methodical changes to the way our hospitals operate. It will keep showing up improved earnings, improved volumes, higher average revenue per patient year after year. You'll not see immediate results, but it will be over a period of time.
You're saying that the trade-off is that you want better average RPOB, perhaps, or average revenue per patient, better gross margins, and therefore these steps will, while they might impact the top line for some time, they'll result in better margins. Is that how we should think about it?
Yeah, one is definitely there's an aspiration for better margins, but right now we are more focusing on better cash flows. And we don't want to deal with significant cash flow uncertainty at this stage. So a lot of the moderation is also happening from that perspective.
So how does that impact your cash flow, working capital, so to speak, receivables, so to speak? Because these are aimed at better receivables, I presume.
Yes, that reflect in our June quarter and September quarter receivables, because the payment cycle for many of these schemes is 6 months to 9 months. So at the moment, we, like every other hospital, in the December quarter, collections are normally very poor from government customers because they have budget freezes. The budget release happens in the last week of March, early April, and that's when the cash flows start coming in. So all we are trying to do is not create a significant load on the cash flow going into the first half of next year. Having said that, it's a very small rationalization. We still have nearly 1/5 of our revenue still coming from these payers. So that impact will not go away. But to some extent, whatever we can do, we are trying to do in terms of improving our cash flow mix.
Right. And while, for the full year, your CapEx is budgeted at north of 1,000 crores. I think year to date, what you've incurred is around 450 crores. Is it going to be a case where some amount of that CapEx, the actual cash outflows, get incurred in the next financial year, or are you going to be?
Yeah, little bit flow over will be there in the next financial year, but actually cash flows may largely happen. Capitalization may happen in the next financial year once the commissioning happens. A significant chunk of this capex is being spent in Cayman, and that is most of the funds are committed, and there is a payment schedule to the vendors based on which it's being paid out. So most of the cash flows are being spent. I think you may have a 1 quarter flow over, maybe to some extent, because of the timing of the payable days.
Also, since we are in the last quarter, and a lot of these capexes are also attributable to the greenfield expansions like acquisition of land in Calcutta, plans for greenfield in Bangalore. So we are pretty confident of spending major part of the capex by the end of this March. And of course, there'll be a small spillover, as Sandhya said, in terms of the routine replacement and upgradation capex, which may have a little bit of a spillover to the next year, but most of it will be utilized in the next 45 to 50 days.
Right. And coming on to Cayman, I mean, in the quarter, as far as I can understand, Cayman ARPOB looks YOY down by about 4.5 to 5%, and OPD volumes are also down and down. I think by a reasonable number, if I've got it correct, if I recall it correctly from your presentation. So, any thoughts there?
Gagan, hi. Can I just get some clarity on the question? So if we look at slide 10 of the presentation, the box on the bottom right talks about the OP numbers. So Q3 FY23, which I think you were referring to, is at 7,647, and Q3 FY24 is 9,558.
Okay, I might be wrong there, but
sorry, Let me know if there's any question then. Yeah.
Okay. On ARPOB in Cayman, is there a drop?
Yeah, similarly, if you look at the box on the top left in the same slide 10, we answered this question to the previous gentleman as well. So if we look at Q3 FY23, the inpatient revenue per patient is closer to 4 million, whereas in the current quarter, it's 3 million. Although that seems like a drastic drop, what we suggest is always in Cayman to look at 3-4 quarters or perhaps longer to look at a trend. And when you do that, you will see that it's pretty in line with more or less the number we've traditionally been at. The reason was Q3 in FY23 was an unseasonally high quarter for this particular metric because of a few discharges that were very high in value. Because the underlying volumes are low, it's a low base effect of a few big discharges skewing this particular metric. But if you look at a longer time series, you will see that this is not something that concerns us.
And from an occupancy standpoint, how does Cayman, how's been Cayman doing from year on year?
Sure. So, we prefer to disclose, discharges, outpatients, and, those kind of productivity metrics. Occupancy will change and can be skewed basis on the percentage of patients we focus on daycare versus non-daycare. So in terms of the activity metrics like outpatient numbers, discharges, etc., number of surgeries, we have seen a good growth that you can see even in the series of presentations, the similar presentations every quarter. A lot of that has been driven by more of a high throughput procedures, especially in the outpatient services that we are focusing on these days.
And when does the new facility come on board? I presume it will be next year, but is it possible to understand exactly when next year are you scheduled to bring it on board?
Sure. The answer would be, a range, but we are aspiring to do it closer towards the end of Q1 of next year. We have more certainty around when the facility will be ready in terms of its infrastructure, but then there is a series of regulatory requirements as well that does have a broad range and we have less control over. But our intent is to start towards the end of Q1. More specifically, definitely, it'll be around June-ish, I would say. Yeah.
Okay. In the oncology unit that you commissioned this year to date, any possibility to understand the contribution to the Cayman revenue and profits from that specific unit?
Sure. So, nothing that I can share in specifics, but more qualitatively, the unit is doing very, very well, better than what we expected. We're pleasantly surprised with it. Radiotherapy in any geography, whether India, Cayman, or wherever, is always going to be a high margin service from a P&L perspective because our operating costs are quite low in radiotherapy. And that oncology facility as of now is only radiotherapy. So in that sense, it's definitely margin accretive. And we are happy with the volumes and revenue we're seeing so far.
Final one from my side on the India piece as we head into the next year. Is there a reasonable case for an early double-digit sort of growth? I mean, would you be in any way constrained to achieve that? I'm not talking from a demand perspective, more from one, your ability to service that kind of demand, and two, from the fact that you are looking to do something about changing payer mix. So is that a reasonable possibility given these constraints, or are we looking at a different sort of aspiration there?
I'll answer this one.
Yeah, Vinny, go ahead.
Nothing constrains us other than our ability to not disclose what next year's numbers are going to look like. Yeah, Sandhya, go ahead.
Yeah, thanks. So it's there are few aspects we have to keep in mind. One, of course, like you rightly highlighted, there is a payer mix work which is ongoing, and we will take it, as the year progresses. It's an election year, so we are taking some actions towards that, but we may take some different actions after we get more confidence on cash flows. So that's one aspect. The other aspect is that we are working continuously on our throughput, and that's been our journey. If you see, for the past several years, we've not added a single bed. In fact, we've rationalized beds, we have repurposed beds, we have converted some of our general ward capacity into ICU private ward capacity. So we've been rationalizing our business and improving our throughput on an ongoing basis. So that should help us service the demand as well. Having said that, we can't make any forward-looking statements on where we are headed. Our journey is a little more long-term journey, because we are not taking very immediate occupancy, any immediate bed addition decisions. We are not doing any significant acquisitions. We are buying land and building. So which means our next point of inflection will come when all the capacities go online. And until then, we have to keep doing more of what we've been doing for the past several years to be able to deliver results. So I don't know if I answer your question, but I think that's really how we're looking at it.
See, we've seen the pickup happening to some extent after the Q3, but it is a task cut out for us, and we are pretty confident, along with our efficiency drive, as Sandhya mentioned, we would also be able to build up on our volumes.
Gagan, any more questions from your side?
Just one follow-up, which is that on the throughput, since a lot of emphasis is laid on improving the throughput and operational metrics, is it possible to understand what are your aspirations there? For example, if with the same bed capacity next year, with all that you've invested in increasing throughput, how much can you improve the throughput?
Yeah, we are constantly working on this, whether it is a procedure driven or whether it is any of our processes of diagnostics. We're increasing the workstations in the diagnostic space for ultrasound echoes and seeing more throughput in the CTs, MRs, and all these things, so that we'll be able to service more, because we are able to see the need from our OP-EMR, which we have an adoption which is very high, touching 80% plus. And we know that there is an opportunity for us to see the throughput increase in these areas. And that is one area where we are working on. And while the procedure areas, whether it is infusion centers with our onco program, or the program with the dialysis, or various other daycare procedures, we are trying to see how much we can do within the very shortest possible time. So we're trying to do most of our angiograms as like a short stay within a 4 to 6 hours kind of a period, so that we'll be able to do 2, in some cases even 3 shifts in the same bed, which we'll be able to utilize. So these are all some of the things which we are working on. It's a constant work with the clinical teams, and hopefully we'll master it in 2-3 quarters down the line.
So the way you track it is to check on the ALOS and the footfalls that we're achieving per quarter.
Thanks, sir. I'll get back in the queue. Thank you.
Thanks again. Robert, can you please have a question?
Hello. Could you just talk a little about your longer-term capital allocation? So when you're looking at your key markets, how you're seeing supply demand, the way you see the opportunities, and so looking beyond the kind of the next 12 months, how you're weighing up the different opportunity set.
Sure, I'll answer this one. Our key priorities are winning greater market share in Bangalore and Calcutta. So for the next decade at least, the bulk of our investment will focus on these two geographies. The remaining will just be strengthening the existing hospital set that we currently have. So that means adding more beds or adding adjacent capacity to the existing network. So most of this will be in some combination of brownfield and greenfield investment in hospitals, clinics, pharmacies in the network of cities that we're currently operating on. And this will be the case for the next easily 10 years.
Thanks. And just with that in mind, so when you're assessing the kind of supply side of the equation, what are you seeing in terms of your peers' actions and so on? And do you think that gives you a kind of a clear enough runway in that regard? It sounds like you do.
Sorry, by peer action, do you mean, could you just clarify that?
In terms of general hospital and clinic supply across those markets. So if you look, I presume you can see what your peers are up to a reasonable degree.
Yes. It's fair to say that most of the mature cities in India have an adequate supply of hospital beds, but they are short of very high quality beds. And so there is a shift in the preference for patients to move from the very large unorganized sector, which constitutes essentially 90% of all the private bed capacity in the country. And for them moving away from unorganized hospitals and unlicensed nursing homes to larger, more accredited hospitals. So in that sense, while there is a crowding effect of most large corporate healthcare groups being focused in the large cities, it does not represent the true demand that exists among the patients in those cities. And the demographics are in our favor with rising incomes, rising old age. We do believe that the opportunity set is tremendous.
And do you mind if I just ask one follow on that, just in terms of how you're anticipating, for example, the insured mix versus out of pocket, etc., how you're expecting that to evolve over the next 5 years?
For us or for the sector?
Well, for you in particular.
Sure. As of now, it's about 20 to 22% that it hovers between that range for organized payers. Whereas for our peer group, it's sometimes close to 40 to 50%. So our aspiration is to reach those numbers. I'm not sure that we could achieve it in 5 years. It may take us a bit longer just because of our patient mix and our legacy of being a provider of very low cost subsidized services to large numbers of people. But the aspiration is to get to what the peer group is able to achieve.
That's great. Thank you very much.
Thank you.
Thanks, Robert. Abhishek, please go ahead.
Hello. Am I audible?
Yeah, we can hear you.
Yeah. So my question is, I think there is a decline in the Q3 versus Q2. I know we might have already spoken about the seasonal effect. Is the seasonal effect more pronounced in the northern and the western region where we're seeing decline, or is a seasonal phenomena is across the country? That's my question number one. Yeah. Then I'll ask another question.
Yeah, of course, the seasonality is a little bit more. The impact of seasonal fluctuations is a bit more in northern and western side of the country. Of course, seasonality has affected the other parts also, but it has affected us more in north and west. Typically, it's, most of these hospitals have higher volume of scheme patients and mix in such hospital. Added to the fact that we're consciously trying to take the effort to improve our payer mix, and the replacement is going to take time for these paying customers. this benefit will also take some period of time, and that's the reason why there was a little bit of further dip in this. But if you look at the way in which these units in these regions are performing, Dharamshila generally generates reasonably double-digit margins quarter on quarter. Gurugram also, except few aberrations, this quarter is always in a single-digit margin, and it's also shown good improvement. And Mumbai also is expected to be positive in the late Q4, and then maintain stable margins from then on. So though there has been a bigger fluctuation because of this reason, but I guess they are giving meaningful contribution to the overall scheme of things and should be able to maintain this.
Sure. I guess you also talked about that bulk of your focus over the next 10 years is going to be the Bangalore and the Kolkata region, right? The greater Bangalore and Kolkata region, if I may say. So, and is that because, and do we have, let's say, a huge untapped market in these two regions that we have a pretty, long runway, or is it because in the north and west we don't have a strong brand presence? Like, what's the reason of like focusing on the southern and southern region and west and eastern region?
So two reasons for that. One is that the Bangalore and Calcutta hospitals that we run are all full. And so you naturally build capacity where you're sure you're going to get all the patients to fill it up. There is huge demand in north, huge demand in west, even more demand in other parts of east and central India. It's just that it will take us longer to fill up those beds, while the investment it's essentially the same. The construction cost in any part of India is roughly the same. So the confidence that we have in filling up beds and generating quicker returns is much higher in Bangalore and Calcutta. That's one of the, let's say, the most non-emotional, spreadsheet-driven reason why we would invest in these markets. The other one is that these are the places where we have the highest brand recognition, highest market share, but we're constrained in being in very few locations around the city. There was a time when a lot of patients would travel for days to come see us, or they'd be willing to wait a very long time to get an appointment with some of our doctors. That's not the case anymore. And so we are not able to hire more doctors. We're not able to accommodate more people in the same current setup. So we have to add more capacity to accommodate all the patients who want to see us, but are not willing to wait 4 or 5 days in order to do so.
Understood. And then from the capacity expansion standpoint, I guess we have a very good debt to equity ratio, and that should allow us to could we not have expanded or not done more capex? Just a question on that, because I see that we do have the requisite sort of comfort there.
Oh, we absolutely want. I mean, I'm the biggest proponent of pushing for more capex, but then Sandhya's job is to hold us back. So we do what Sandhya says.
All right. Yeah, those were my questions. Thank you so much.
Please go ahead with the question.
Yeah. Can you hear me?
Yes, we can hear you.
Yeah, just quickly, in terms of going forward, what are the areas of business like your oncology and the heart part? Which other areas are you seeing expanding into, or would you like to focus on only these two major ones? I mean, bulk of your business.
Yeah, so though these constitute a major portion of our clinical work, orthopedic spine, neurosciences is one area where we are constantly looking at opportunities for growth. And that is also a more or less a community-based growth, because usually patients, because of mobility reasons, will come from a 50-kilometer radius for all these kinds of work. While GI sciences and acute care, which constitute emergency care and the critical care, forms a major portion of our work. So these are the areas where we are constantly looking at growth on this.
Yeah, my second question was, when you had mentioned that you would like to be a lowest cost, but comparatively lower cost service provider. You would want to match that with some specialty kind of procedures which would gain you more revenue with less time spent at the hospital. So is there any kind of trade-off between these two? Because I understand your service culture does prompt you to go for more value-added services.
Yeah, if you look at it, neurosciences is got a combination of more of OPD practice, and most of the procedures now are becoming minimal access and endoscopic and different kind of procedures. It's not necessary when you say that all those days of neurosurgery being very large, ghastly surgeries are no longer there. A lot of things work on an interventional neurology platforms and things like that, which has got a very minimal stay. So we do look into all these aspects, but when we give a service, you can't give a patchy service, kind of a service, because patients come for a variety of and a spectrum of requirements across a specialty, and we need to be there, and we have the ability and have the clinical, bandwidth to service them. But these are not something that will be large volumes, but will give a lift to the department so that even the routine work comes in large numbers for us. So whether it is GI sciences or neurosciences, is all the same. These are all very short stay, minimal access work that keeps happening. We will focus on that. Critical care is a very crucial element, because if you are going to look at emergency care and acute care, critical care becomes a crucial element, and it's not necessary that with all these advances in sciences that they will spend. There is a portion, maybe 12% of the 20% of the patients will spend time, but a lot of them recover very quickly nowadays.
And one last question: is there any geriatric care planned given the demographics moving?
We do have in our flagships people who specialize in geriatrics, so that they don't land up with 5-6 cross consultations across multiple departments, but they will take into account specialists as and when required. But by nature of the way the spectrum of work happens, geriatrics is a reasonable volumes that we deal with in all our centers.
Thank you very much.
Yeah. Any more questions? Rishi, you have any questions? Abhishek, any more questions? You've raised your hands.
Yeah, so I'll just go ahead with my question. So Viren, you just mentioned that the demand scenario has changed over the last few years for you guys, where earlier patients used to come from far off, they used to wait for days or weeks for your doctor's appointments. Now that's not the case anymore, and doctor talent retention is becoming tougher. So could you give more of an understanding here what's happening? Because from what I understand, your value proposition is very high. So a patient who can't afford, does he have more options now, and that too closer to his city, or what's happening here? If you could just give an understanding.
You're in a big city, the options for most normal kinds of surgery, so gallbladder, cesarean section, any sort of compound fracture, those are almost universally available within walking distance of your house if you're in a big Indian city, meaning the top 10 cities of India. But that's not necessarily the area that most corporate hospitals play in. For them, it is about being there for the heart surgery, cancer surgery, very advanced procedures. But it doesn't mean that those procedures don't happen. They absolutely do happen in large numbers, but then that tends to be driven by convenience. So a lot of the investments we're making in increasing our footprint, in looking at these greenfield expansions, is to be able to cater to a large segment of diseases. We're building also a large number of clinics, which we historically never did, so that their first point of entry for whether it is even a cough or a cold has to be within our network. So since we build an integrated plan around that, then they see there is a lot more value in sticking to one network provider for all your issues. And we'll have all information, we'll be able to treat you much better, and we'll have a much better idea of the longitudinal care, that the longitudinal view of what happened to you over your life. So in terms of the demand, yes, it is currently being fulfilled in quite a large range of hospitals of different kinds of quality standards. The preference always is that people get it done at more accredited places, and we want to be able to cater to that.
All right. So basically, you go